Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a positive sentiment across the equity screen in the Asia Pacific.
SEBI has barred former MD and CEO of IndusInd Bank Sumant Katpalia, former Deputy CEO Arun Khurana, and 3 other senior executives for alleged insider trading.
US Court of International Trade has struck down Trump's reciprocal tariffs.
If there is action against the board, you can expect that there is going to be some more tumultuous times going ahead.
The moment the bell went, it's actually a 100-point gap up opening, so it's looking very good. 24,850 on the screen, inching back slowly towards that 25,000 handle.
India was never pricing in for a Trump tariff impact, and logically should not get a big rally on the back of that either.
Nifty flip-flopping between the red and the green, 24,750. Its total value of gold that it holds has risen by 57.7% to 4.3 trillion rupees.
See, remember, it's expiry day, a couple of hours, rolls going on quite strongly is what we gather, especially as far as derivatives are concerned.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, with me Surbhi and Nigel. And if you thought in the morning that the global risk on trade due to the tariffs being put on hold on account of the US court, well, you're mistaken. It's a very, very quiet day. While the rest of the global markets have partied. So whether it's this 1.5% kind of up move in the Taiwanese markets or the Japanese markets and the Korean markets, or the 0.5% plus up move in most of the European markets, things are up and about in Asia and Europe, but Indian markets are very, very quiet and range-bound today.
Quiet today and quiet for the week so far. We've really gone nowhere on the index. I mean, it's just consolidation. For the week, we're down 0.5% so far. But I think, Rima, this is like, the gentleman from Bank of America Securities were telling us in the morning that while for the rest of the world, this could be a huge sigh of relief, even if it's temporary, for India, it's not really a tailwind because India didn't fall as much. We weren't slammed when the tariff orders came in. We were singled out as one of the markets which was lesser impacted. So therefore, even if the tariffs are off for whatever reason, perhaps, we're not the biggest beneficiaries. And whether the tariffs are really off or not, that indeed is a big question mark. I'll talk more about that as we go along. But yeah, for the timing, I think back to tracking individual stocks.
Well, that's right. It's a quiet day, but next 60 minutes, we'll have a big bazooka move in one or the other direction.
You want to bet it's up or down?
No, I don't want. But I'll tell you what, on the downside, the level you should be looking at is around 24,670 approximately. That's closer to the low point of the day. So 24,670 is the important mark we need to defend on the downside. And if that is defended, that on the upside, I think the high today was around 24,850. So we have got our range set for the day between the high and the low. I think we will get a move. Normally you see, just take a look at that. For the last couple of hours, there's been barely any movement.
Yeah.
So it's lull before the storm. I'm expecting a storm. Let's see how that goes.
I was exactly coming to that analogy. It's before the monsoon hits, it's like dead heat. And then you have the storm hitting. So let's see, we'll figure out whether it's green or red, the color of the storm.
I was wondering with Surbhi, before the monsoon, I thought you were going to say before Friday. It's the dull and then party.
In the last hour of trade, which direction the market is going to take. We have with us Mitesh Thakkar joining in with a few closing strategies. Mitesh, you want to wager? Is there going to be an up move, down move in the last 1 hour? If yes, which side? And what would be the key levels in trades now?
Yeah, good afternoon. I've been maintaining that the way the indicators are positioned on the hourly, 2-hourly charts, it still looks like a very flat market. The breakout will happen if the Nifty will show signals of getting past 25,050, which as of now are not there. So for the time being, we'll go with the assumption that 25,050 on the upside to about 24,500, 450 on the downside is the area which index will do. Similarly, on the bank Nifty, you would have noticed repeated attempts around 55,600 failing. So that becomes the ceiling in the short term. And around on the downside, 54,550 is the broad area. So it's about 1,000-point kind of a range. The market seems to be very, very sideways. And therefore, trading should be more concentrated towards identifying stock opportunities. On the stock side, I have a buy on Hind Zinc with the stop at about 456. look for targets of around 475 here, maybe even 480. But yeah, I mean, so the chart is good, so it can even exceed targets in the upside. And the second stock which I have is more of a sell call on ITC. We keep a stop at about 422. Look for targets of around 408.
Okay. ITC, well, after yesterday's cut on the back of the stake sale and the fact that it went ex-dividend, it's not that the stock has rebounded today. ITC is still down, close to about 0.6%. But Cummins is trading with gains on the back of the Q4 numbers. The top line is up 6% on a year-on-year basis. There was this conference call. Vamakshi is here with the latest.
Well, Reema, a good operational growth that has come in for the company. When you look at the revenue growth, it came in at 6.4%. This is much lower as compared to what the street was building in. And this is largely on account of flat growth in the domestic business. The exports, on the other hand, that did quite well. The exports were up almost 39% on a year-on-year basis. As far as operational performance of the company is concerned, same quarter last year, there was an one-time gain of around 60 odd crores, which is why the margins last time around were much higher. Therefore, we were expecting some bit of reduction in the margins, but the reduction that has actually come in this time around is much lower than what we were penciling in, and the net profit at 521 crores, even though is down almost 7.2%, is above our expectations. The company held a conference call this morning. They say that they will be posting double-digit revenue growth in FY26. They endeavor to sustain gross margins at the same level that we saw in FY25, or rather improve it slightly. They're cautiously optimistic on the demand outlook. They did see a 7% decline in the power gen revenue, and this is because in the base quarter there were pre-sales for CBCP2 products. Now they do expect volumes for this new product, that is the CBCP4 Plus products, to rise going forward. In another 2 quarters, they believe that the volumes could actually cross those of the earlier products seen. Prices will take 1 to 2 quarters to settle down completely. The competitive intensity has picked up, but they are able to hold on to their prices, which bodes well from a margin perspective. They're seeing a lot of demand coming in from data centers, and as far as their capex plan is concerned, they believe that they will continue in the same range as seen in FY25. This will largely be sustained in capex. So overall, when you look at the numbers, good set, good commentary from the management. Resultantly, the stock is higher.
Okay, Cummins, indeed. Stock's been doing very, very well today. Vamakshi, thank you so much for that. In fact, let's go to our first guest on the show to get a sense on this. Mehraboon is with us right now, so let's ask him what he thinks about Cummins. Mehraboon, great to have you on. Thanks so much for joining in. It's the fag end of earnings season. Lots of stocks still in focus. What are your thoughts on something like Cummins? Any interest?
Well, I would say that the conference call did go well, but in terms of numbers, I think there was slightly below expectations. And if you ask me, Surabhi, I'm invested, clear disclosure, in Kirloskar Oil Engines, a business which is similar, complete, I think, reporting segments also are quite similar to Cummins. So while Cummins, considering the fact that the stock has come down sharply from its 52-week high and the conference call has gone well, it could be a good trading bet from the long side. But if it's a hold and if it's a buy and hold, I would still prefer Kirloskar Oil, a company which I'm tracking very closely. Nothing negative about Cummins, but between the two, I prefer Kirloskar Oil.
Since we're on the subject of some of these capex-oriented stocks, capital goods, power or power equipment, Mehraboon, any other thoughts? Names like Hitachi, GE Vernova, TNT. GE Vernova, after results, also rallied a lot earlier this week. Anything else you like in this space?
I think I like this complete space, if you ask me, Surabhi. And I think Hitachi, one of the names which you mentioned, is also quite good. Again, a disclosure, I'm holding the stocks of that. Besides, if you ask me the entire capital goods space, there are names like a Kirloskar Pneumatic, a Kirloskar Industries also, which look very attractive at the present valuations. And the numbers which they gave, the conference call which took place, I think everything was well received by the analyst community.
Okay, let's talk about the crypto landscape in India. So far, it's characterized by a lot of taxation. The regulatory framework is still evolving. In fact, CNBC-TV18 asked Sunil Bharti Mittal, chairman of Bharti Enterprises, his view on cryptocurrencies and their regulation in India. Listen into what he had to say.
A revisit of crypto regulation is what you suggested. Would you like to expand on that?
No, all I said is we have Mr. Vaishnav after me, the next session. I only saying that things have started to move very fast on crypto. And of course, AI, we already discussed, is moving very fast. And this is an area where the government will have to start applying their mind on how to ensure that the right regulatory framework is available for India to make full use of AI, crypto, whenever the time comes.
Interesting times. Let's see how that pans out. For the time being, let's get back to stocks. And Merbon, I wanted to ask you about Wellspun Corp. Now, the stock is surging in today's trading session because there was a combination of very, very good numbers that came out, good management commentary and good visibility as well. So let's run you through the top 5 points. First, on the EBITDA front. EBITDA in the quarter came in at the highest in the last 5 quarters. And as you can see on the screen, it's a steady improvement that we're seeing at around 460 crores or thereabouts. That's almost the highest that we've ever seen. Point number 1. Point number 2, if you look at it, it's not just the past quarter, but the guidance going ahead is very, very good. And as you can see in the last couple of years, when they give a guidance, they go ahead and beat the guidance. Now, in their EBITDA calculations, they include other income. So just keep that in mind. Even taking that into account, they are factoring in an 18% growth on the EBITDA guidance that they're talking about, 2,200 crores. Well, that's the higher end in comparison to what the street was working with. So that's a positive. Besides that, you want to look at the balance sheet as well as the order book. And that's important as well. So as of now, they have cash in the books of around 1,000 crores. That's close to around 4-5% of the current market cap. They are throwing up free cash flows every year, operating cash flows as well, keeping in mind that they have a big capex plan of around 5,000 crores. But cash in the books is always good news. And order visibility as well is there to back them up. 19,500 crores. So they're booked out for the next year or so. And more importantly, the US business will be part of that big order book, which will gradually get executed. And that's the high margin business as well. And since things are looking up for them, they are going on to say that they're going to be setting up a greenfield LSAW pipes business in the United States. Remember, as of now, they were sending the LSAW pipes from India to the United States. But now with these tariffs, they're saying they rather set up shop in the United States because imports are not going to come in. And there's a ready market out there. The commentary on demand as well in the United States is very, very encouraging, which tells you that things are looking up for them because they are favorably placed in the United States. So any kind of tariffs actually is a positive for Wellspun Corp, and Trump's drill baby drill outlook as well, that he's been talking about, that will benefit them because it will help in the transportation of oil and gas. Merbon, Wellspun Corp, the stock actually went through a period of consolidation after rallying in the last few years. I think in the last 9 months or so, it's not moved much. It's been in this 10% band or thereabouts. Today, it makes a fresh 52-week high. What's the outlook? You have 22,000 crores of market cap, but you're guiding for an EBITDA of around 2,200 crores. Your take?
I think, Nigel, you described everything quite well. And I have been, again, one more disclosure over here that coincidentally, this is also a stock which I'm holding for quite some years, and I have been following this company for many years. Allow me to say that the company has really evolved itself well over the years by diversifying its product portfolio across various segments as far as the pipe business goes. It's also gone now into something like a Sensex plastic. So there are a lot of things which this company is doing. Apart from what you stated, I would like to add something, that there are 3 major triggers which I see. One is the government initiatives such as the National Gas Grid policy, which is helping the company. Number 2, you mentioned somewhere in passing Saudi Vision 2030, which is emphasizing on safeguarding water and energy security, which is also aiding the company. And third is increasing the Sensex share in water storage tank. And fourth is the robust US business operations. The company is booked for the next 2 years as far as US goes. Now, the company has made many investments over the last 2, 3, 4 years, I think, and this is getting fructified. I think its Raipur plant has started business operations, Bhopal plant has started business operations, Chhattisgarh should start soon in the near future. The company's presentation, which is there available on the site, I think where they are mentioning about the EBITDA of 2,200 crores and guided for 70,500 crores turnover in FY26 looks easily achievable if you ask me, considering that the investments are now going to bear fruits. With an earning per share, which is my estimate, which should be around 65 to 70 rupees in FY26 at the present price, despite the run-up post the numbers yesterday, I would say the share still offers value to investors. So even if I would say that, with clear disclosure, even if I would say that somebody goes and buys into it despite the rally which has been seen today and is ready to hold on, I think this company should consistently grow, and the growth will be reflected ultimately in the valuation, because at 65, 70 rupees earning per share at the present level, you're getting the stock at around 12, 13, 14 times, which is very, very, very attractive. So because the company will keep on growing, I personally believe there should be upgrades coming in the stock in the future.
Okay, so that's a thumbs up to Wellspun Corp. Got that, Mehraboon. Thanks very much. The next stock on our radar has to be, of course, IndusInd Bank, right? Let's pull up the stock. It's actually the best performer on that over the, over last evening, of several key management personnel being barred from the securities market, including former MD and CEO Sumant Katpalia. The story is that IndusInd Bank is half from its peak. It used to trade at 1600 plus just about a year and a half back. So it's half from there, and the market seems to be taking a view that perhaps from here on, things can only get better. Now, is that view correct or not? We'll discuss this with in the matter yesterday. Certain scathing observations came through. Ritu, tell us more.
That's right, SEBI has passed an interim order against 5 senior executives, including former CEO Sumant Katpalia and former Deputy CEO Arun Khurana of IndusInd Bank, in an insider trading case where the regulator found that these individuals had sold shares of the bank while in possession of unpublished price. To the extent of the losses avoided, barred them from trading in securities until further notice, and directed them to submit a full inventory of their assets. Now, together, SEBI says they avoided losses of 19.78 crore rupees, out of which 14.4 crores was by Arun Khurana alone and 5.2 crores by Sumant Katpalia. The others who have been named are Sushant Saurav, the head of Treasury officer, who notably is also part of the 2-member executive committee currently overseeing the operations of the bank in the absence of a CEO. Now, SEBI's investigation showed that senior management was aware of the discrepancies a good 15 months before they made the exchange disclosure, and not only their internal team, even external auditors noted about 3.5 lakh shares without making a single new share purchase in the period between December of 2023, when the management first found out about the discrepancies, and March of 2025, when the information was made public. Now, beyond the 5 executives named, SEBI is also investigating other suspects that it did not name. Questions are already swirling around the committee getting revamped as well. Now, with the CEO and deputy CEO already out, the story, of course, is far from over, and more heads may roll if insider trading charges stick.
Absolutely, Ritu, got that point. 2 of these 5 KMPs are no longer with the bank, including Mr. Sumant Katpalia, but 3 of them are back with these insider trading penalties and charges. Mehraboon, the market's view again, the market wisdom seems to say that how bad can it get? It gets better from here, and the asset is good. But do you agree with that? Because sometimes these turnarounds, building confidence, cleaning up the books, absolutely all the, forensic audits, etc. Sometimes it can be a very long-drawn process.
20 years that have been coming, I think I have mentioned many times positively about IndusInd Bank, and my positive tone completely changed and I became subdued as far as IndusInd Bank goes after Ramesh Sopti left, full stop. And my experience in the stock market tells me one thing, that the banking sector changes or it's not all that good. You should not be married to the stock forever. So if you had asked anybody this question of IndusInd Bank 6, 7, 8 years ago, I think IndusInd Bank was in the top 5 for everybody. HDFC Bank, ICICI Bank, Kotak Bank, Axis Bank, and somewhere IndusInd Bank would have put its neck in. And that was the state. In the last 1-2 years of Mr. Looking at the way the market has reacted, that also, according to me, seems illogical. Stating that the Hindujas, according to me, they should be understanding banking better than most other industrialists, are there and they will put in money. That is being hopeful. So in a market in which there are plenty of opportunities which keep on facing wrath from virtually everybody right now. So I would clearly give it a pass. And this stock, honestly, or this unfortunately is not on my trading screen, and I'm not going to look at it again. Clear disclosure, I have exited the stock more than 1.5, 2 years ago.
Is looking for cheap bargains, right? That's what explains the resilience that IndusInd Bank has shown.
I think so. I would like.
May not always be the right course.
Were there not many hopefuls as far as Yes Bank goes also? I think if we remember, Yes Bank was the most discussed stock. Everybody was talking about it. Just because the stock price came down, ignore it. If the stock has to go for whatever reason, let it go up.
Okay, got that. In fact, that's the point well taken. Earlier today, in fact, we spoke to multiple industry voices over IndusInd Bank. Listen into what they had to say.
I think the near-term fundamentals appear challenging for the stock. The growth is likely to be very subdued given the liquidity constraint that they will be grappling with. the incremental funds that they're under pressure, and the path to a normalized 1% ROA seems a bit long drawn from the current moment. Given that the next 1 to 2 months, the news flow is likely to be a bit more positive vis-a-vis what we saw in the last 3-4 months, do not expect a significant negative stock price action from the current levels. However, as I mentioned, post the CEO appointment happens, we expect the stock.
Have had similar cases in the past, right? There have been a couple of such banks who went through a similar journey, I mean, in a different form, but they had serious losses, change in management, regulatory interventions. And post that, what typically happened is you see a consolidation in metrics, like the growth disappears. The focus goes back in terms of protecting the depositors versus shareholders. That generally is the script from regulator. And in the, like generally the period followed by maybe 18 months to 24 months, in that period, you typically see no activity, from such companies. In terms of growth, generally it's a cleanup period.
Okay, it's time for a break. Mehrboob, thank you very much for joining in. As we do that, let's also tell you we're very excited to unveil our brand new Global Business News channel. The all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. So tune in to CNBC TV18 Prime at 12 noon for the Global Reset and the Global Lens at 8:30 p.m.
Welcome back. You're tuned in to Closing Bell and you're watching CNBC TV18. Well, Vaibhav Sanghi, CEO of Ask Hedge Solution, joins us on the show. Hi, Vaibhav. Good afternoon. Good to see you when markets not doing anything, at least for today. But how are you all positioned? I mean, what kind of positioning do you all have? If you'll have a long-short ratio, if you could help us out with that.
Sure, Nigel. I think market, as you rightly mentioned, actually are consolidating between 24,500, 25,000 at this point in time. The way we view it in terms of the market situation as of yet is that, as against earlier kind of time period, especially in the last 3 to 4 months, whatever headwinds we were kind of witnessing, or probably a market, had on an overall basis, I think they have, to a great extent, being mitigated, in the sense that the tariff news or the tariff noise, I would say, actually is fading away in that sense. Lastly, in terms of a geopolitical situation as well, I think that is kind of settled well, in all its context. So
What we are seeing from here onwards is that is a market where the earning expectations were pretty low, and I think the earnings have been pretty okay as per the expectations, along with the worries which are out, from a market standpoint, which brings to the point that on an overall basis, we may see market consolidating to kind of move inching up over medium term, from here onwards.
Weber, but do you think we can clock in some decent gains, at least in the second half of the year? We were just chatting with the BofA top team in the morning, and their view is that we're in the last leg of the rally. From here on, their target price for Nifty year end is 25,000. And they're saying that earnings expectation, though there has been a recovery, is still very high, and we could see earnings downgrade. So basically, in a nutshell, it's not that they're seeing too much downside, but the upside appears to be limited. What would your call be, say, for the next 6 months?
So I would say 6 to 12 months. In a scenario where we may see dollar depreciating, I think continued inflow to emerging markets will happen. If that happens, along with your domestic flow pretty strong, we may see, or we continue to see, the markets kind of getting supported on the technical side. Whereas in terms of the fundamental side, our strong belief is that because of the measures, both on the monetary side and the fiscal side, which have been taken from the government to kind of, increase the momentum in terms of the GDP growth, while we had always had focus on investment side, I think consumption starts to become a play purely because of the tax benefits and the monetary policy, which have become kind of, accommodative. So decreasing interest rates, higher liquidity, fiscal incentives, all these are likely to help the GDP growth kind of surprise the street on the upside, which is where I do think that, yes, the earning expectations is reasonably okay, or probably marginally high as per the street expectations. But my sense is basically, I think we should start some decent recovery on the same in the second half. So markets, I think, are looking up at this point in time. Whether it goes to 25,000 or 25,500, 26,000 is just a number. But whenever we've seen in our experience that the earning momentum starts to kind of improve, then the PE multiples also start to kind of improve.
What would be your top bets from here on? What do you like? What do you dislike? Any new changes that you've made? Any new trends that you've spotted?
Sure. So I think from a sectoral perspective, I think our preference for the next 12 to 24 months would be consumption and consumption-driven sectors, starting with consumer discretionary. Our view is that because of the pretty good focus from both the state governments or central governments and with the RBI in terms of the monetary policies as well, this is a piece which earlier was absent, is now going to kickstart the incremental growth from here onward. So that's a sector which we like. In addition to that, we are slowly and gradually, but surely getting constructive from a medium-term perspective on the IT. We were neutral for quite a long period of time, but now, as the global worries recede, and we see some amount of improvement in terms of your quarterly numbers along with the guidance on a gradual basis, we do think that the valuations are reasonable from an IT space. So that is, again, a sector which we will look at. Lastly, banks is something we continue to be neutral on. We are waiting for the bank rate cuts to kind of probably happen, and then we will probably take a call, on that sector. And financials is something which we like.
Interesting. From the IT pack itself, what do you like? I recall, I think 12 months or so ago, you all were positive. Then I think you all went into a neutral stance on IT. And now you're again taking a fresh look at it. Will you all go for the mid-cap names that grow at a faster clip, or will you stick to the larger cap names from the tech pack?
See, I think it will be a mix of both, in the sense that from an individual company, growth prospects is something where we would probably lay our attention to. Also, all those companies where we've seen a good amount of deterioration because of the lack of visibility in terms of the discretionary spend, our view is that while the free cash flow yields are looking pretty comfortable there, we will try and look for opportunities which give you some amount of downside protection, along with improvement in terms of the future potential deals which may come about. So that is a space which we may look at. And it is, to be honest, I think it can be a little bottom-up driven as well. To go fully bullish on the IT sector, probably it will take a quarter or two to take that view.
I might be wrong, but did you like cement a couple of months back? In one of our conversations,
Yes, I think we were bullish on cement. I think cement has done well in terms of the sectoral performance. The way the southern prices have kind of held up, I think it's a good sign. Probably it's just at the start of the monsoon, and probably you may see some amount of consolidation in terms of the cement pricing. My guess is basically structurally we may see improvement in the profit matrix because of the overall consolidation in the industry. So cement on declines is something which we continue to like, but not at this point in time.
Any tactical trade on IndusInd Bank?
No, I would probably pass that.
All right. Thank you very much, Vaibhav, for joining in. We'll get into a break. As always, on the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter. We'll also get you a few BTST calls from our technical experts. Welcome back. Expiry move seems to be playing out. It's just 3:02 and you can already see the fireworks in the market. In 2 minutes, the Nifty's moved up close to about 50 points and now inching towards the 24,800. Oh, it's crossed 24,800 as well. As Nigel was earlier pointing out, one key level to watch on the way up will be our intraday high, which is 24,890. But as you can see, sharp 3 o'clock, as the monthly expiry plays out, you can see the market spike up. So the move directionally is on the way up. But let's find out what dealing rooms are saying. Nimesh is now joining in with all the chatter. Nimesh.
Hi, Rimana. So you'll expect this up move because the feedback is that the rollover has been quite strong. So you might see a bit of a reaction on the upside on the Nifty and the Bank Nifty in the last 30 minutes. But otherwise, it's been a quiet day. The flows are quite muted as well. I guess today's flow will not be much important because of the expiry. So not much to read into. A couple of things which stood out for me. One, the entire May series belonged to the broader market sector stocks, and looks like that momentum is going to continue in the June series as well. So again, could be a series where the Nifty could be range bound, but you might see a big action in the broader market names. Second, I guess now that the earnings season is coming to an end, the most important thing to watch for the next series would be the RBI policy and the rate cut. So again, you're seeing a bit of traction into the rate sensitive names. All the real estate stocks are buzzing in trade, so are some of the NBFCs as well. So that could be one space which can see a lot of action in the beginning of the June series. So that's something to watch out for. And I guess in the May series also, there's been a quite rotation happening from banks to IT, and within IT it's the mid cap IT where there is a bit of flow moving back from the larger institutions. So looks like for the June series, the sector to watch would be IT, and within that, the mid-cap IT could be in focus. So that's the overall feedback from a market position point of view. But I guess from a flow perspective, being an expiry day, nothing much to read into.
Well, that's right. Nimesh, at the start of the show, the girls were saying that it's too quiet a day. I said that, we'll get some move, and it appears that's taking place, at least as of now. Nifty moving towards the higher end of the range. And the Nifty bank, actually, that was down 200 points, moving up. Purely expiry-related play is playing out. That 3 p.m. move has come about. But Nimesh, individual stocks, what are you picking up?
So in terms of individual names, the first stock is Hyundai Motors. Been consolidating in a very narrow range of late. But again, the feedback is that there could be a large block coming soon in Hyundai Motors, so that's something to track there. Second stock is LIC. We saw big moves yesterday post the earnings and the management commentary, but the volumes have actually picked up. There is a bit of buying as well. I understand one domestic large mutual fund has been an active buyer in the last couple of days in LIC, so that's the second stock. And remember, 950 is the IPO price, so once it crosses that, you might see a bit of further traction as well. So that's something to track there. The third stock is Canara Bank. Within the PSU Banks, this is one stock which has consistently been delivery marked by large institutions. So again, there is a bit of buying interest in Canara Bank in today's market. And the last is a couple of stocks where there is delivery-based selling. Vedanta as well as Power Grid, both have seen some delivery-based selling today. So looks like some bit of profit booking for larger institutions in both those names today.
Thank you very much for that. Nimesh, I was looking at mid-cap IT since you said that it's finding favor. And it has. This month, in the month of May, Zensar is up 18%. So is Coforge. Tata Tech is up 17%. Hexaware has a 16% rally to boast of. Firstsource Scient have gained close to about 15%. Tata Elxsi, LTI Mindtree are up nearly 11 to 12%. We're talking about the month-to-date gains for the month of May. So buying has really come back in mid-cap IT compared to frontline IT. But thank you very much for that. Mitesh is now back with us for a few BTST calls. Mitesh.
BTST on the buy side was JSL to begin with, trading at the near today's high. Take a BTST here with a stop at 662 for targets of 680, and the other one is LMT, which is a BTST with a stop just below levels of 36.29 for targets of 36.80.
Thank you very much for that. And now, in a massive development which will have global ramifications, U.S. court has struck down President Donald Trump's tariff. Surbi's now moved over to the big wall to tell us what this order implies and what could be the options for the Trump administration going ahead. Surbi.
Well, almost 2 months after it was unleashed on the world, the Trump tariff juggernaut has finally hit a legal roadblock. On Wednesday, the U.S. Court of International Trade struck down a series of executive orders which had put Trump's global tariffs in motion. The court's view is that the International Emergency Economic Powers Act, which the U.S. president had actually invoked while declaring a national economic emergency back in April, simply doesn't authorize him to take unilateral tariff calls and levy universal tariffs. Basically, the court has said that Trump has overstepped the authority that was granted to him by the legislation. And those are the highlights that we just had on the screen earlier. These are the executive orders. So let's talk about what these executive orders were, which have been struck down. Now, the court has basically said that there are 4 executive orders that have been struck down. So let's start with the latest one, Executive Order number 14257. With this order being declared invalid and quote-unquote contrary to law, Trump's 10% baseline tariffs, as well as the reciprocal tariffs which were levied on countries around the world, become null and void. The other executive orders that have been struck down render the fentanyl tariffs levied on Canada, Mexico, and China invalid. Finally, the court order also strikes down the 25% tariffs levied on goods that were not covered by the US-Canada-Mexico agreement. It is, however, important to note that the 25% tariffs on steel and aluminum remain unaffected by the court's order, as these were imposed under a different act, a different piece of legislation, and I'll come to that in more detail in just a bit. So what happens now? Well, the US administration has already swung into action and it has challenged the trade court's order at the US Court of Appeals. Legal experts feel that this battle, in all probability, is likely to head to the US Supreme Court. Now, in the meantime, Trump has several other legal options in his arsenal to keep the tariff heat on. The first of them is a wider use of Section 232 of the U.S. Trade Expansion Act. Remember the steel and aluminum tariffs, which I just spoke about, and they're still in effect? Now, they have been levied under this very section of the Act. Trump could expand the scope of this Section 232 to other sectors as well. In fact, the administration is already evaluating potential tariffs on aviation, on electronics, and pharma imports under this Section 232. So watch for this. Next, there is the US Trade Act of 1974. Section 122 of this particular act allows the president to levy a baseline tariff of up to 15% to address quote-unquote balance of payment concerns. And, the current trade issues could fall in this category. The levies can last up to 150 days without the need for any sort of congressional approval. Let's move on. There is then the Section 301 of the same US Trade Act. This allows the US government to launch a wide trade investigation against any US trading partner and then impose tariff levies. However, this could be a very cumbersome and time-consuming route, so may not be the US administration's first port of call. Finally, there is the option of using the US Tariff Act of 1930, which has not been used till now. The section number 338 of this legislation allows the US to levy up to 50% tariffs on imports coming from countries which discriminate against the US. That's a pretty wide term, so it can be interpreted in any way. Now, as the tariff war takes a legal turn, here's a statement from the White House spokesperson, Kush Desai. This was immediately after the court order. He went on to say, and you can see it on the screen, it is not for unelected judges to decide how to properly address a national emergency. So this was first. And then we had a social media post from the man himself, Donald Trump. And it's very cryptic, but he goes on social media and he says he's on a mission from God and nothing can stop what is coming. Now, it's cryptic, whether it means more tariffs, the use of any one of these factors that I described, only time will tell. But the markets could be rejoicing for now in the interim. However, the only thing that is certain after Wednesday's court ruling is that this is only round one of the legal battle, that the US president has a wide array of legal and executive options in his arsenal to keep the tariff blitzkrieg on.
Okay, all right. Well put. Thanks a lot for that, Surbhi. Well, let's get back to the equity markets then. And as Surbhi was explaining that neat piece for us, take a look at the markets. The Nifty Bank actually should come up for you. This is an expiry-related move. Just take a look at it. Big move is what we are seeing. Kotak Mahindra Bank, ICICI Bank. I think at some point of time that graph should come up for you. The Nifty Bank is what we're talking about. So we have Kotak Mahindra Bank, ICICI Bank and HDFC Bank. All of them spiking up to the high point of the day. Big move being seen out there. And that's the reason why we've seen a big spurt. All of this in a matter of around 10 minutes, we've seen this big move on the Nifty. But let's focus on the broader markets. Then Deepak Nitrite, that's rallying in trade, better than expected. Fourth quarter, margins expand, and also a couple of the divisions did very well. Upasna joins us to fill us in with a quick analysis. Upasna?
Well, it was a strong beat versus the street estimates. Now, growth was mainly driven by company's key segment, that is phenolic segment, which witnessed volume improvement and revenue saw an uptick of 5% and margins also improved by 150 basis points at 15.6% on a YoY basis. Now, coming to the consolidated numbers, revenue saw an uptick of 2%, EBITDA saw an uptick of 5%, EBITDA margins saw an uptick of 30 basis points at 14.5%, while the street was working with a number of somewhere around 9.7%. PAT was impacted down about 20%, and company has indicated that the PAT remained impacted because of the higher input cost and also the performance of the agrochemical segment. Now, coming to the con call highlights, the company has given a upbeat commentary. FY25 was a challenging year for chemical industry, but coming to the domestic demand, company has highlighted that the domestic demand showed early signs of recovery. Company has also expanded its product portfolio and has secured long-term contract is what they have highlighted. Now, company is confident of profit bouncing back to normalcy in FY26 after the profits being impacted in last couple of quarters is what they have said. Now, demand for dyes and pigments also have improved after Q3 is what they have said, while agrochemical demand continues to remain subdued and company expects this trend to continue for some more quarters. Now, company anticipates market conditions, it will improve coupled with softening of input prices, which will certainly aid margin trajectory from here on is what they have said, but they haven't put an exact number to this. Now, Vadodara R&D facility of 1100 crore is set to be commissioned in Q2 FY25 is what they have highlighted, and they've also said that the nitric acid facility will be commissioned either by end of Q1 or at the start of Q2. Now, coming to the guidance, company remains confident and optimistic about growth in FY26. It has given a positive and a strong outlook for FY26 with several projects which are set to commission in Q1 and Q2 as highlighted earlier. So overall, good set of numbers and commentary remains also quite upbeat.
Thank you very much for that. By the way, there are going to be quite a few earnings which come out today. So Bajaj Auto is there. You've got an Ola Electric that the street will be tracking closely. You've got a Prestige. You've got an Amara Raja. You've got Sobha. Mazgao. Samardhan Motherson numbers are already out. EIL numbers are flashing for you on your screen. But even post-market hours, lots of important numbers. And I remember last time Ola Electric numbers were quite weak. The loss had widened. So let's see what they report this time around. EIL stock has spiked. Anand Tandon is now with us on the show. Anand, the stock of the week appears to be Apollo Microsystems. 3 days in a row. And in 3 days, the stock is up 35%. Another 6-7% up move on Apollo Micro. Looked at it?
No, I'm sorry. Not a stock the right time.
Okay. Do you want to comment on EIL? I can see the numbers on the screen. Bottom line has gone up substantially, 280 crore versus 115.
Well, obviously, the kind of investments that one is looking at in terms of refining capacity and in the oil sector, etc. Engineers India will be one of the beneficiaries of that, especially since our relationships with in the Middle East are doing quite well. The domestic side, also we are looking at expanded capacity. It's not that I have anything specific to add to this particular company, but consultancies in general have done reasonably well, especially on the infrastructure side, if you look at what's happening on railways as well. So the question in all these cases is obviously how much you pay for it, and that remains a problem even today.
All right. Hi, Anand. Good to see you this afternoon. What about a stock like Midani? Are you tracking it? One of those defense plays that last year they didn't grow at all. But when we spoke to them last, they said at least factor in a 10% growth for this year. And they're optimistic that they can grow at a faster clip. Any view?
So, obviously we have repeatedly mentioned that there is going to be a fairly strong order position for most of the defense PSUs. Midani just happens to be in the metal space. So to that extent is a little more niche than many of the other contractors. The challenge, however, is the execution. Most of the PSUs are just not able to execute fast enough to be able to take up a greater share of the revenues. So the conversion from order to revenue remains rather lackadaisical, and I think you're seeing the same thing in Midani. But overall, I think in the global space also, you will find that most defense companies will trade at higher valuations going forward because the order books are just brimming over. The question really is whether we have, and for a company like Midani, obviously the question would be how much they can push their production out. I would think that the best way to approach defense is to take a basket of stocks rather than take any particular one. Midani, as I said, is somewhat unique among the basket that there would be in India, therefore should form part of the companies.
Well, that move indeed happened, the 3 p.m. move, and how Nigel called the storm right, 100 points up. And that's how the market is.
Well, I was saying, right, it is too boring, too quiet a day. The market said, okay, Surbhi and Rima didn't like it too much. It's expiry day, fireworks.
Some action.
And the bulls came challenge.
100 points higher. Actually, lots and lots of stocks moving around right now. Garden Reach Shipbuilders, 7.5%.
And it
suddenly.
can be a very, very interesting final 13 minutes. I'll tell you what, because there was a lot of call writing that was seen at the 24,800 call. And now we have gone to 24,850. So some of those call writers are stuck very, very badly on the wrong side. We could get a big swing even from here.
Okay, all right. So this is charging higher and higher. Anand, just very quickly on some of these solar stocks like Wari, Premier, what thoughts here? Do you like anything from a more sort of steady portfolio picking perspective?
Not particularly. I think the sector is obviously going to grow quite well. But for the EPC players, I don't think that there is a kind of sustainable mode there because, obviously, you set up a project last 20 years. There is a certain amount of money coming through it from the government because of the home subsidy, etc. So there will be a large amount if you are in the retail space. A company like Wari, which is looking at institutional kind of business, perhaps there is a move towards renewables, but I think there is going to be again challenges that you'll see on the transmission. Broadly, unless you are manufacturing the panels and so on. And providing some technological advantage. The rest of it is simply a question of execution. On the panels itself, we have always a protection from the Chinese because otherwise we'll just be swamped over by them. So it's a business which is dependent on government policy far too much to be something that I would be very comfortable with. That said, the current environment globally and in India seems to favor this sector. So I would expect to see reasonable performance from here on, but it's more tactical than strategic.
Okay, fair point. So tread with caution if you're venturing in. It's more of a tactical move, says Anand. Got that point. We'll take a quick break, come back and get more questions going with him. But as we take the break, let's get you some market opinion. Bank of America Securities 2025 India Conference kicks off next week. We caught up with Amni Shah, head of India Research, and asked him about his outlook for the Indian market and some of their top sectoral choices.
We had set out a target for Nifty at 25,000 for December. I think we are right about there. So we think markets are now likely to mostly consolidate as far as Nifty is concerned. Valuations are full. Clearly, we can't fault the long-term drivers or the growth in India. Macro story continues to stay well. But 21 times at Nifty, it's almost at +1 standard deviation. So if you're a near-term investor, our advice is that maybe start booking some profits. If you're a long-term investor for a 2 or 3 year period, then the view is that you should expect muted returns going forward. Some sectors which were going to be more impacted, like autos, maybe pharma, IT, on the worries that US economic slowdown could cut down on tech spends, there might be some rally as a relief as of now.
What are the top 3 things that you would tell a young entrepreneur today, which you believe are the non-negotiables?
If you're a first-time entrepreneur, or you're below 30, you gotta swing for the fences.
And so, how soon can we expect PhonePe to build from India for the world?
Ask the CTO. It's India's time to build for the world.
How do you look at competition?
Shamelessly, I think in our sector over the last 10-15 years, the most innovative by far and away has been Paytm, and we talk about this.
Yeah. Right to win comes in from how we execute, but the right to play comes in from whether we have the building blocks to be able to enter a new business, even if we are entering late.
The Tatas empire, I see the Birlas or the Ambanis, or more recently the Adanis and the Mahindras. They have things that every new business can take for granted.
Welcome back. We were just talking that it's going to be a busy evening. Lots of earnings expected. Bajaj Auto is right on top. And Sudarshan joins in with the expectations.
We are expecting a steady set of earnings from Bajaj Auto. As far as revenue growth is concerned, it would be supported by healthy volumes, which have seen an increase of 4% year-on-year. Also, realization is expected to improve both year-on-year, also on a sequential basis, and it would be supported by better product mix. Now, talk about the headline numbers. Profit is seen rising 3%. Revenue increased by 4%. It may come around rupees 11,995 crore. EBITDA too can increase by 4% to rupees 2,406, and margin may hold above 20% for 9th consecutive quarter. It may come in around 20.1%, same what company had reported in Q4 of FY24. volumes were higher 4% year-on-year, but were down 10% sequentially. Realization is seen increasing 1% year-on-year and up 4% on a sequential basis. In the commentary, what exactly would be watching out for? First, what does company say about the domestic outlook? Because as of now, whichever companies have reported earnings, they believe that growth in FY26 is going to be at the similar level what the industry saw in FY25. Apart from the domestic, what would be important for Bajaj Auto is the export outlook, because Nigeria is a very important market for Bajaj Auto. So we'll have to see what does company say on export front. And lastly, about the outlook on EV, because the EV contribution in the last few months has seen a significant rise for Bajaj Auto. But as far as earnings are concerned, we are expecting a steady set.
Okay, all right. Thanks, Sud, very much for that. So those earnings definitely in focus. Let's go back to Anand Tandon for some thoughts. Anand, the auto space, barring Mahindra and Mahindra, has really failed to fire. We've been waiting for many, many quarters. Beyond M&M, do you think anything else looks like a decent buy at this point?
Well, the only other company which has shown some kind of volume growth has been actually ICE. The rest of them have done pretty much nothing. And, while the management has, especially in the case of Bajaj, tried to talk it up by saying that, volumes will pick up, the reality is that two-wheeler volumes have been inimical in terms of growth. And with the fight still on in terms of who will win in the EV space, and therefore new manufacturers stepping in and increasing the size of the production pipeline, it's unlikely that you'll be able to see any kind of price increase or margin improvement or any of that. Because the competition is just too high. The volumes are still not recovered enough to actually be able to grow the market meaningfully. So I think two-wheeler still remains dubious in terms of the private vehicles. You are looking at only the SUVs, hence Mahindra. Here too, there are a lot more new models going to come in, both from Maruti as well as, we've already seen a pipeline coming in from Kia. So I think the production, it's unlikely that you'll see marquee brands getting created here other than the ones which are already there. So by and large, it remains a space which is somewhat tepid. You may see a little bit of an improvement in the international market because of this tariff changes in the US. But I think all is not settled as far as where the tariffs will finally reach out. If the tariffs improve, maybe somebody like Tata Motors may have a bit of a kicker on the upside.
And from the auto ancillaries, anything you like?
Well, overall, I think, you are going to look at two major trends. One is that people will be looking to restructure their supply chains and look at little more onshoring. And therefore, while the opportunity remains fairly large, it still is a bit dicey because you don't know how many countries will actually put up protectionist barriers. The second thing is that if the market itself doesn't grow very much, and I think the global market will kind of slow down this year more than last year, you will not be able to make that kind of a headway that you would expect. So the larger players with international markets obviously benefit companies like Motherson and so on. But by and large, I think this is also a space which will remain somewhat under pressure, because when the OEM is not doing well, the pressure passes on to the entire supply chain, including the ancillaries.
Okay, all right. So that's a view on the auto space. Final thoughts, Anand. Earnings season pretty much over. Anything that really stood out for you where there's clear visibility of growth and valuations don't look sky high? Any names, mid cap, large cap, anything?
So broadly, if you look at where the market is, we are looking at a decent macro and poor micro as far as India is concerned. Decent macro because inflation is under control. Foreign exchange deficit may not be high because of oil prices and so on. Macro is poor because we are overvalued. If you take out 21 times 1 year forward earnings, take out the banks, you're looking at 24 times 1 year forward earnings, almost 2 times standard deviation higher. So near term, I don't think you're likely to make too much money from the market, which is exceptional. Slightly longer term, again, depends on where you are. Muted results are likely. The expectation, the only sector that people are betting on is things like cement and IT. To my mind, it's a hope trade. It's not really anything that we have a concrete reason to believe it will do well. But the hope is that things like may improve from here on, and hence you may want to get into that. But those are perhaps two of the sectors that could give you a positive surprise. I think real estate is something I would watch out for negative surprises going out 12 months from now.
Okay, all right. Anand, request you to stay with us, but we need to take let's take an intraday chart of a few stocks. Pull up the Nifty Bank. It's up 300 points right now. So that's a close to 450 point move in the last hour itself. Big move is what we're seeing out there. Kotak Mahindra Bank, HDFC Bank. Those two heavyweights from the red, they moved quickly into the green. And that's the reason why, in fact, we're going to go home with solid gains. The Nifty as well up 130 points. So beautiful looking screen as we wind down. Broader markets, well, there was a lot of gainers in today's trading session. V2 switched gears, that one was up close to around 20%. Federal Bogle Gods, that was up close to 13%. You had a couple of other, Unimec was up close to around 10%. Wellspun Corp is up close to around 10% in trade today. UTI as well up 7.5%. Axis Gates was locked in upper circuit with a gain of close to around 5% or thereabouts. So it was